Namaskar. So far we have seen income tax calculation related videos. Some three videos we have seen. Now this is the last part. In this we are going to see the model calculation of income tax. I have taken a value which will address 30% tax also. Of course I have made a round figure so that with the mind you can calculate instead of using calculator or something. But it is the same, model is the same. So I thought now the first thing we have to do in the income tax calculation is add all the income, all the 12 months. It is like whenever you calculate, assuming that you start calculating sometime in June, July. So April to June, July you would have got the salary that you have to take actual, and remaining period you have to estimate the salary and you get the total. So similarly, in the year end when you calculate all the whatever you have received, so gross salary which includes the income which are all exempted from income tax. We have already discussed exempted income tax. There are income which are totally exempted. There are some income which are partially exempted. So everything we have to add as a total income. No, by when you add, now I have made a sample of 18 lakhs 500. This is a rough amount, a round figure I have taken for easy calculation. Now in that what we have added is house rent allowance, leave travel allowance. Leave travel allowance is for the private employees. In government it is leave travel concession. And special allowance is like you take the case of Northeast region or Andaman and Nicobar Island. The remote locality allowance is exempt up to 1300 per month. So that is also the special allowance we had to add for the total income. Total income, whatever you receive, you are adding. Now we will be removing that separately. We will see how it is done. And leave travel allowance is for the private employees. Leave travel concession is for the government employees. Leave travel concession is given once in 2 years for government employees. So, which is exempt from income tax. Same way, for private also, once in 2 years, leave travel allowance is exempted if the employee has availed that LTA by visiting any place. So to the extent actually incurred for visit, that amount will be exempted from income tax. Remaining are taken as allowance and it will be added to the taxable income. And take the case of mobile reimbursement, it is exempted totally. So we have just add and then deduct finally. And food coupons are given by private companies to the employees. And the rule is per meal 50 rupees can be given free from tax. It is actually exempt from tax. So a person cannot have more than 3 meals in a day, but continuously all the 30 or 31 days, nobody can be in office. So it cannot be 3 meals every day. Assuming that you give justification for retaining the people all the 3 meals also, that is every time. Again, it will not go beyond 5,000 rupees because 31 days will come less than 5,000 only. No, that way. So whatever food coupon is there, that is also removed from the total income after calculating the total. Now total income has got all these components, which is 18 lakhs 500 rupees. Now house rent rebate we are given 1 lakhs 20,000. I will tell you how it is calculated after this total. Okay. And other LTA and exempted allowance, whatever this is, some 30,500. So that net comes to 16,500. Once you deduct this 1 lakhs 50,500 from 18 lakhs 500, you get 16 lakhs 500. And standard deduction another 50,000. So the net comes to 16 lakhs. Now this is the component of income where you have removed all the exempted values. Now we'll also see the house rent allowance related things and other component in the in continuation. 16 lakhs. Let us see. 16 lakhs has come. In that, now HRA rebate I am giving, we already given 1.2 lakhs. How it came? Assume now salary, pay plus DA. There are three components we have to see. Salary, 10% of salary value we have to see, 40% of salary we have to see, and then actual HRA received we have to see. So salary is basic pay only, but DA is added in case DA is taken into account for retirement benefit. For central government employees, gratuity is calculated adding DA also. So for central government employees, pay plus DA will be salary for this rule, for HRA rebate rule. Assuming that it is 1,20,000 per month. 10% of salary is 12,000. 40% of the salary is 48,000. Now, 40% of salary is every place except four principal metro cities: Delhi, Mumbai, Calcutta, and Chennai. For these four cities, it is 50% of the salary. So the point is, the rebate cannot be given more than 40% or 50% as the case may be. This is applicable only for the private employees, because government employee gets maximum as of now is 27%, which is going to be revised to 30%. Beyond that, they won't get. So that is, but private they give up to 40% also, because they can flexibly arrange a bouquet of salary. So that is the reason for putting this 40% condition also. So now rent, the person pays some 22,000 per month, let us say, in a major town, let us say. So rent paid minus 10% of salary comes to 22,000 minus 12,000 is 10,000. HRA he receives every month 20,000. Now the green I have shown, in that small lowest value is, least value is 10,000 per month. So that multiplied by 12 is 1,20,000, which I already deducted. Now this monthly I am showing, but for income tax purpose you calculate monthly and bring it to annual basis also for HRA rebate. After that, this is over. Now tax on employment is profession tax. Some place it is not there. Normally union territory and all other places they will have local tax, which is profession tax, which can be deducted from the gross income. And entertainment allowance maximum 5,000. But normally it is not allowed most of the central employees, so I have not given anything. If anything is there for private employees also, they can have rebate with certain conditions. Some 20% limit and all is there of the total salary, something like that. But it is limited to 5,000. Now this, after deducting profession tax, it comes to 15 lakhs 98,000. Now let us see next thing. Income from house property. Income from house property, we are going to see, if it is self-occupied property, you have a property purchased through housing loan and you pay interest. Up to 2 lakhs you can get rebate if it is self-occupied. A person, an assessee, a person who pays income tax, can have two self-occupied property under the grounds that he is staying in one place, and one more property is used by his parents. So, but total admissible amount under self-occupied property concession is up to 2 lakhs interest paid on housing loan in a year. If you pay more than 2 lakhs, you will get up to 2 lakhs. Otherwise, actual interest below 2 lakhs, whatever is that. Assuming that spouses or husband and wives are working, they have to file separately. And the property is joint property. So the interest they can have 50%, whatever percentage they have in the interest in the document. Same level. Loan also it will say what is the interest, 50% each, whatever it is. So let us say husband and wife together they take a loan and pay the thing, and they pay annually some 3 lakhs, let us say. So 1.5 each they can claim. They pay interest up to 4 lakhs also, 2 each they can claim. If it is one person, it is only 2 lakhs. But spouses, individually they can claim. This is for self-occupied property. Lettered property. So beyond beyond two houses, two flats or whatever it is, and wherever you rent it out also, if it is even one property, it has to be brought under lettered property. So you can't say I have 3 houses, all are self-occupied. No, it is only up to 2 houses. Now, let-out property is actual rent received or market rent or rent receivable. You can't say I have not received, it is pending. You have to pay. And normally, if the rent is very less, they can check the municipal conditions, etc., for calculating the market rent, and that will be assessed. So when we give actual thing, nobody can have any problem. So here I have taken the person receives 10,000 per month as rent. So in a year, 1 lakhs 20,000 he gets. That in the letter part, gross annual value is 1 lakhs 20,000. So municipal tax he pays 6,000 rupees. So that has to be deducted. So 1 lakhs 14,000 is the remaining amount coming under tax, income from house property. In that, there is a standard deduction for maintenance and whitewashing, all other things. 30% of this value. Whatever rent you receive, that 30% you can add. This is only for lettered property, not self-occupied property. You can't have anything like that. And 30% comes here is 34,200. And now, if you have not got any loan, this 1,14,000 minus 34,000 is 200 is 79,800. That has to be added to your income, and then tax will be calculated. That 79,800 will be added to your salary income of 15 lakhs 98,000 shown on the top in the red color. Suppose you have got a loan and you pay more than 2 lakhs or 2 lakhs. So that can be added here. If you pay more than 2 lakhs, you can claim only 2 lakhs in a year. Remaining you can keep separately, and that can be claimed within 8 years of you are occupying the house, you have completion of the house construction that you have started letting out or whatever it is. So normally you won't pay all the 8 years huge interest. The interest will come down. When it comes down, so you can add all those unadjusted interest up to 8 years only beyond that. But earlier there was no limit for let out property. Whatever interest you pay will be deducted here. But now some 4-5 years ago they have changed it to 2 lakhs limit only. With 8-year condition, you can suppose you have paid this year 2.5 lakhs, 50,000 you have to keep aside separately by indicating carried forward loss. Under carried forward you have to show, and then whenever it comes below 2 lakhs, your interest component, you add that, and every year you can add, and you have to complete it within 8 years. Otherwise, you will be losing that. This is next thing. Afterwards, now for our calculation, I have taken self-occupied property, which is 2 lakhs. So net after deducting 2 lakhs, it is 13 lakhs 98,000. Now we have seen salary income, income of house property. Now other income we are trying to see. Other income includes interest, dividend, everything. So you add here. Here the person has reported 20,000. You add that. So it is, I have put SB account because savings account has got one relaxation under 80, section 83TA for the people who are below 60 years. 60 years and above, it is 80 TTP. Interest up to, savings bank interest up to 50,000 can be taken as rebate. Now, after adding this, it comes to 14 lakhs 18,000. This is the taxable income. So now he has come to the 30% bracket. Now, in that savings I am deducting, sorry, ATC, GPF, PPF, NSC, tuition fee, even housing loan principal. There are many such things, but all put together totaling to 1,50,000. ATCCD1B is pension, National Pension Scheme. Another 50,000 you can add, so it adds to 2 lakhs. 80D is medical insurance. Medical insurance is for a family, it is 25,000. If no insurance is there, medical test annually 5,000 you can add. You can take as a deduction, but totaling to 25,000 only. And if you have a senior member, for them that is above 60 years and above, parents, for them separately you have medical insurance up to 50,000. So for you 25,000, for parents 50,000. No, it is as per actual payment of subscription. It is not lump sum amount, that is ceiling. Suppose you are the assessee himself or herself is 60 years and above. So for her or himself, it is again 80D 50,000. And if they are parents, for them, if he has taken medical insurance, another 50,000. So maximum 1 lakhs can be claimed if you pay medical insurance premium for senior citizens, including assessee. So now I have taken 23,000 annually. 80G is some donation. National Defense Fund, Prime Minister Relief Fund, Chief Minister Relief Fund, they all get 100% rebate, and many other things. List you have to see, and wherever other than these major things, they will give a specific period. You have to check the assessment order, the assessing authority's order, up to which period the rebate is allowed, whether it is 100% or 50%. Based on that, you can, for donation, you can make, you can claim here. Of course, donation, there is no limit. If you have got 100% rebate donation, whatever donation you made, you can deduct here. Now, this donation part I will discuss now. I will complete this, and because there is a small borderline people will have to make one point. And ATTTA, just now I told, interest on savings bank, it is added 20,000, 10,000 can be deducted here. For senior citizen, up to 50,000 under ATTB, it can be. Now, the total deduction comes under Chapter 6A is 2,38,000. So, net taxable income is 11,80,000 rupees, which has to be taxed. Now, this donation part, I wanted to tell you. Suppose somebody, all housing loan, etc., they got some 9 lakhs, etc., is the 9 lakhs 5,000, let us say. 9 lakhs 5,000, one person. He has got housing loan and pays 2 lakhs or more than that as interest, and he has got all savings 1.5 lakhs, pension fund 50,000, everything is there. So all deducting, now it comes to 5 lakhs 5,000. 9 lakhs 5,000 too, it has come to 5 lakhs 5,000. This is one part. One person has got total gross salary is only 5 lakhs 5,000. Two scenario. Now, up to 5 lakhs, the in the old regime, tax is 5%. 2.5 lakhs more and up to 5 lakhs, you have to pay 5%. But if your taxable income is only 5 lakhs or below, you don't need to pay any tax. Now, in two cases I told you, it is taxable income is 5 lakhs 5,000. Of course, 5 lakhs 5,000 total income case can go to new regime and you will not have to pay any tax. But in the other case, 9 lakhs 5,000, 4 lakhs we have deducted under Chapter 6A, and income from house property minus income of 2 lakhs. So 5 lakhs 5,000 he has to pay 12,500 for up to 5 lakhs tax, and for 5,000 20% is another 1,000. So 13,500 plus 4% thereof. So you just another 4% is another some 500 plus it will come 4%. So what happens is you end up in paying some 14,000 rupees. You pay this 5,000 rupees, 5 lakhs 5,000 net amount, net taxable income to PM Relief Fund or the National Defence Fund. You don't have to pay any tax. So the borderline, the people who have taxable income less than 5 lakhs 12,000, if they pay donation, their tax liability comes down accordingly. This is one small calculation. That is why I made. Now the income tax 11 lakhs 80,000 is in 3 slabs. Rather, it is 4 slabs, let us say. How? First slab is below, there are up to 2.5 lakhs, no tax. More than 2.5 lakhs up to 5 lakhs, the slab number 2 is 5%. So 5% you have to take. And above 5 lakhs up to 10 lakhs you have to take 20%. And above 10 lakhs is 30%. Now this 11 lakhs comes all these table. The first slab 1 to 2.5 lakhs, no tax, leave it. So 2.5 lakhs, above 2.5 lakhs, up to 5 lakhs is 5%, which is 12,500. And above 5 lakhs up to 10 lakhs is 20% for that value. That comes to 1 lakh. So 1 lakhs 12,500 plus beyond 10 lakhs is 1 lakhs 80,000. So if you already out of 11 lakhs 80,000, 10 lakhs you already calculated as 1 lakhs 12,500. Now this 1 lakhs 80,000 30% is 54,000. The total comes to 1 lakhs 66,500. For that 4% education cess and higher education cess together 4% comes to 6,660. So total tax payable is 1,73,160, which is whatever you have paid already, remaining has to be paid. And normally income tax has to be paid when the average comes more than 100 rupees every month. That means annual thing, even 1,200 annual liability. That is a rule. Normally that smaller amount people pay in the last 3-4 months. But rule says it has to be paid throughout the year. Now, another point. Whatever we have discussed is for the people below 60 years. If the people are 60 years and below 80 years, instead of 2.5 lakhs, the exempted value is 3 lakhs. 0 to 3 is 0, no tax. Above 3 lakhs up to 5 lakhs is 5%. So here 5%, that is 12,000. And if the person is senior citizen in this value, of course 80TB also will come, but here instead of 1 lakhs 12,500 adding, 1 lakhs 12,000 will be adding, and then remaining will be 30% of the value above 10 lakhs. Suppose the person is above 80 and above, up to 5 lakhs there is no tax. So first slab itself are 20% only. So in the 11 lakhs, let us say this is the one net taxable, the taxable income. So up to 5 lakhs there is no tax. 5 lakhs to 10 lakhs, above 5 lakhs to 10 lakhs is 20%, so 1 lakhs, and then above 10 lakhs is 30%. So instead of 1 lakhs 12,500, you pay 1 lakhs plus 54,000, 1 lakh 54,000. For that, education cess has to be added. This is for old regime. New regime, we already discussed, there is no rebate except this pension fund, and of course income from house property 30% for maintenance it is available. They are not removed it, so by default it should be given. So this takes care of income tax calculation. Now we are going to see what are the things under 80C. 80C maximum we are told 1.5 lakhs. It includes all the provident funds, LIC premium, NPS contribution. NPS contribution can be here and that other format. So totally it will be 2 lakhs. Tuition fee up to 1.5 lakh. ULIP, tax saver fixed deposit. It should be 5-year lock-in period. Sukanya Samriddhi Yojana, ELSS, Equity Linked Savings Scheme, NSA, National Savings Certificate, Senior Citizen Savings Scheme, 5-year Post Office Time Deposit Scheme, Home Loan Principal. All these things can be used for 80C, that is up to 1.5 lakhs. 80CC, triple C, this is again within 1.5 lakhs only. Some pension, special specified pension scheme. 80CCD1 we already discussed. Again, this is pension contribution. For government employee, it is 10% basic pay plus DA and all. So for others, the limit separately 1.5 lakhs again. 80CGD1B, we already discussed about 50,000 adding to 1.5 lakhs under pension fund, National Pension Scheme or Atal Pension Yojana. And 80CCD is government contribution part, that is also removed. 80D, health insurance we already discussed. What is the level and all we have discussed. 80DD is specified illness treatment, cancer, something like that. Up to the limit is 75,000, but actual expenditure can be claimed. 80DDB, again, medical treatment, you don't need to give any special proof and all. It is only treatment you have to give. 40,000 you can claim under this. Not only that, 80E, if you have got loan, education loan, and pay interest without any limit, whatever interest you pay for loan taken for higher studies can be claimed under 80E. All these are all under old regime only. New regime, nothing is there. 80EE. Again, this we have already discussed. Special concession. The people who do not have any house and they have taken loan only recently. And I think 2 finance years ago. For 1 year they have given another 50,000 extra rebate over and above 2 lakhs interest. And 80 EEB is a new phenomena. This is for if you have purchased electrical vehicle and you pay interest for that. Bank loan you have taken and interest up to 1.5 lakhs you can claim as rebate. Government tries to encourage people to get electrical vehicle through loan also, so that pollution can be in the long run reduced. That is the idea. 80G, donation we have discussed. 80GG, this is again 5,000 per month is house rent. If a person doesn't have HRA, I have made this point while calculation also, to maximum 5,000 rupees per month. And 80GGA, scientific research if you pay, it is exempted. Research and development if you pay money. And donation to political party up to 100% is, but it is online payment or check payment, something like that. 80GGC. 80TTA we have discussed up to 10,000 under savings bank. 80TTB is for senior citizen up to 50,000. This also we have discussed. With this we are completing the income tax calculation. Now I will release one video on tax filing format, ITR 1, 2, 3 or 4. I think with this we are completing everything.